So tomorrow is a very critical day for the stock market. The Federal Reserve will be announcing if they are going to do a rate cut or not. So I'm going to be going over the top 4 stocks I'll be adding more of to my portfolio if the market continues going higher tomorrow. And then I'm going to talk about 4 LEAPS opportunities if the stock market goes down tomorrow off of any surprise or bad guidance from the Federal Reserve. So let's go ahead and jump into it. Remember, this is not financial advice. I'm just sharing what I'm personally doing for educational purposes only. Results may vary. Now, if we take a look at the account, we hit brand new all-time highs again today in the portfolio. Obviously, results vary month to month, year to year. But if you do want to see me hit my 8-figure goal in this portfolio, be sure to be subscribed to the channel by clicking the subscribe button down below this video. Also, if you get any value out of this video, please hit the thumbs up button for me. I'd greatly appreciate that. And I appreciate you being here. If we go into the realized gain loss for the day, we did take off some hood puts for a nice $1,000 profit. Obviously, results vary there. But if you want my free trade ideas, I give those away on my Instagram, my X account, and my free newsletter, which are all 3 down below in the description. Be sure to be subscribed to those because they're all free. Also, if you do want to work one-on-one with me and join my high-level mastermind with over 660 clients, that'll be at the top of the description down below. I have a free training for you right here. And then all of our client testimonials that we upload on a weekly basis. Now, let's go ahead and jump straight into it. The Fed decision is expected to feature a rate cut and a lot more. So the Fed will be giving us forward guidance on if they are going to continue rate cuts going into 2026. And that'll be very important for the markets because if we take a look at the CME FedWatch tool, which I look at each and every week to make sure that we are getting rate cuts, it's going to be very important for the economy, for businesses and consumers to borrow at cheaper rates, and for more liquidity to be flowing into the stock market. That is what pushes the stock market higher, right? So as you can see right here, 87.6% odds we are getting a rate cut tomorrow. So extremely high odds there, but there's always a small outlier chance that the Fed either doesn't cut rates, which is a very small percentage, or they give bad guidance, meaning they say, hey, we're going to do this one rate cut, but we don't think we're going to cut any more due to inflation data, XYZ, right? So I'm going to give you both scenarios. Long-term, I'm bullish. Jerome Powell is out of office in May. So more rate cuts will be on the way either way later next year. But we just want to make sure that we are positioned correctly in order to take advantage of any opportunity. So there could be some volatility even next week as well, because next week, right, of course, we have the FOMC Fed rate decision tomorrow, but next week we have unemployment rates on Tuesday, December 16th. And then we also have core CPI, which is the inflation indicator, on Thursday, okay? Now, depending on how these do, right, if these come in a little bit worse than expected, could shake up the markets, but it could also push the Fed to cut rates faster, right, which could be good for the stock market. So I guess we'll see as well going into next week. But I want to talk about multiple scenarios here. If we go down, how far could QQQ potentially go down? How far will the stocks that we're currently in go down? And are there opportunities? Is this a buying opportunity if the market does go down? Or, what happens if the market goes up? Okay, so we're going to talk about both scenarios. Obviously, the odds are we get the rate cut, everything comes in good, and the market starts melting up higher, which is what I believe, right? If we go to the options chain, right, for tomorrow, the market makers are predicting a move of plus or minus $5.50. So from here, we could essentially head up to 631 towards previous all-time highs up at 637. Now, that is my prediction. I think we're going to melt up higher, low volume, kind of like what we've been seeing in the past week. I think we just kind of do this melt up situation, and then we break past all-time highs. Now, obviously, I'm always prepared for the downside situation, given that VIX is currently trading in the 16s, right? There's still a little bit of fear in the market. VIX has been going up for the past 2 days. This is pretty normal. Could it spike past 20? Sure. It's done that in the past. And that's why I follow my VIX cash allocation levels. So if we take a look at that, you could see that VIX is trading between VIX 15 and 20. So there's still slight fear in the market, but this allows me to have anywhere from 20 to 25% cash on the sidelines. I told you in the past video, I was very low on cash, right? We were about 16, 17%. I did up that today and got that around 19%, so closer in line with my VIX cash allocation levels, just in case there is an outlier move to the downside. Now, to the downside, okay, let's talk about that on QQQ. Downside, market makers are predicting, a $5 move to the downside, which would be 620. I think it would actually be overstated. I think it would be bigger than that. Potentially we go down to this first stop at 613. Again, low odds that this happens, but it's always good to be prepared and have some cash ready to know what to do tomorrow if the market does go down, right? This would be the first stop. 50-day moving average would be right there as well, so 613. The next stop would be 600, okay? And I don't think that we go any lower than that. I think this would be a prime buying opportunity into a rally into 2026, okay? So we're gonna talk about both scenarios, what I'm doing tomorrow with this cash, because either way I'm going to be deploying it just with different strategies. One is gonna be cash secured puts if we go higher, and the next strategy will be LEAPS if we head lower. So let's talk about the 4 stocks. First, I want to go over the S5FI. This is a tool that I use which shows me the S&P 500 stocks above their 50-day moving average, which gives me a good market reading on where the stock market is at, right? Are we overbought? Are we oversold? Is it too hot? Is it cooling down? Right now, about 47% of stocks are above their 50-day moving average, so we're definitely not overextended here. The market could head much higher, as we've seen the S5FI as high as, back here, like 92, right? So we're definitely not in that overbought region, which would be somewhere around here between 80 and 90. We have a lot of room to move upwards. So that's why I'm very bullish on the stock market right now. The RSI is not even close to being overbought on QQQ. MACD is looking like we have nice bullish momentum here. And everything's kind of just lining up. We already came off the 5th fastest stock market crash back in April. And then we had a nice 10% pullback in NASDAQ just the past couple weeks ago. So with that being said, the first stock is going to be SoFi. All right. Right now, very, very bullish on SoFi. Now, let's talk about the safe cash secured put play that I will be doing, going into if the stock starts moving up. So we're going to dive into the portfolio. Remember, this is not financial advice. I'm just sharing what I'm personally doing for educational purposes only. Results may vary. But if we take a look at the portfolio, you can see that this is my largest position. 226,000 in cash secured puts. I'll go over there because I know that my face is probably blocking the positions. But as you can see right here, the positions, okay, we have close to 80 contracts of the 27 put options. Now, these are technically now in the money, meaning in 17 days or even 24 days, if the stock finishes below 27, I'm going to have to buy 100 shares per contract at 27, but I'm getting paid to do so, right? I'm getting paid around $8,800 in premium to dollar cost average into a really good stock that I believe will be in the mid 30s by early next year. So if I were to go to the options chain right now and put on a new trade, let's say tomorrow stock goes up, we're at 27.50, 28. I'll go to January 9th, right? And I'll probably go to that 26 put, okay? Right now it's paying out a potential ROI of about 5.26%. It'll probably be somewhere in the high 4s if the stock rallies up into the 28s tomorrow, but that will be a pretty safe play there. 26s, even 25s to be a little bit safer, right? Around a 3.8 potential ROI there. Obviously, results vary based off where the stock's at, but I like those 2 strikes, 25, 26. I have the 27s because I'm very aggressive, okay? So I really like that play on SoFi. Those are really good. And now, what would I do where would I get into LEAPS, okay? So for SoFi, what I'm eyeing is if we head down even further, down to this 25.60 level, this is kind of an entry level, this is an entry point for me. There's been some support in the past, right here, and right here. At this 25.60 level, this will be a LEAPS entry for me, okay? So what I would do, again, I would probably go out, 400 days, maybe even 500 days now to the June 17th, but we'll just go January 15th, 2027, ample enough amount of time to be right. And I would go to the 70 deltas, which would be the 25 strike, okay? I'd pay about $890 to control 100 shares, which would cost me about 2,600 if I were to just buy the shares outright. So very capital efficient, and I would play that. This is how I would play it. I would buy it here, okay, once the stock's at 25.60, and then I'd ride it back up to this resistance area at the 50-day moving average. So the stock would be up probably 9-10%. The LEAPS would be up somewhere around 30%, okay? So I'd probably exit somewhere around this 28 level if the stock went all the way down to 25.60, okay? So that's how I'm playing SoFi. LEAPS position. For the downside, I'm ready to go. Upside, I'm ready to add more cash secured puts if need be. Okay, the next one's gonna be IREN. IREN has been a solid company in the portfolio that I've managed to grow bigger and bigger. They are basically providing AI cloud infrastructure for many businesses that, frankly, cannot build data centers fast enough themselves. IREN already has the energy, they already have the data centers, and they already have the chips ready to go. So IREN is looking like it's forming a nice base right here, kind of a nice cup, right, situation. And I think it's headed much higher. Now, if it does head lower, okay, if it does head lower, let me erase this real quick. Let's talk about actually first the safer play in my portfolio, which is a cash secured put, okay? If we head higher tomorrow, let's say we go to 47, 48, somewhere around there, okay? Let's go to the portfolio. You could see I have the 50 puts that are in the money. I have the 43 puts that are, in a profit right now. If I had to open up a new position, I'd go out 31 days and I'd go to that 40, I'd probably go to the 43 strike again. So the nice part about the 43 strike is that it's paying out a potential 9% ROI. Obviously, results vary based off where the stock's at, but that's usually what I shoot for, anywhere from 25 to 30 delta, depending on how aggressive I want to be. Okay, 25 delta would be the safest. If I wanted to be super safe, I'd go to the 25 delta, which is the 40 strike, picking up about a 6.5% ROI. In 31 days. Results vary, but a very nice return for my portfolio. Yeah, so that's what I would do with IREN. Now, on the downside, okay, if the stock headed back down, I would be eyeing this 42.50 area. Lots of support there, okay, near the lower Bollinger Band, and would be a good entry for a LEAPS play, which I would hold from here all the way back up to that upper Bollinger Band or 50-day moving average, okay? So I'd actually wait for the stock to go up to 54, which is about a 28% increase from this level. So, these could potentially be up 80-90% on the LEAPS, okay? So this stock moves very wildly, but this would be a longer term hold. I'd exit there and take my money and run with it, okay? So I really like IREN. It's building up right here. The volume of buyers is increasing. This is exactly what we want to see. And it just did a bullish crossover on the MACD, okay? So IREN, definitely one in the portfolio that I'm loving. Hood is the next one. So Hood has been one of the best stocks to play LEAPS on. Right now, if the stock goes higher tomorrow, right, market goes up, I would only be playing cash secured puts. If we go to my portfolio, I actually will be adding more here tomorrow either way. So I have the 120s and the 124s, currently 160K position. So I have about 40K left to deploy here in Robinhood. So tomorrow, if we open up higher, we go to 138, 140, right? I'm gonna go out to next month and I'll pick up, probably the 35 delta put option. So that's gonna be somewhere around, the 130 strike. Anywhere between 127 and 130 is kind of what I'm aiming for, which would give me a 4.5% ROI all the way up to a 5.3 potential ROI, okay? So if I wanted to play it safe, again, 25 delta is kind of the safe strike for me. So I'd go all the way down to 123 and pick up that 3.67% potential ROI. The risk there is if the stock goes all the way down to that level or lower on expiration, I'd be forced to buy 100 shares. Totally fine with that, as I've done that many times before on Robinhood. So that's my play for Robinhood as far as cash secured puts. Now on the downside, this thing's got to go down a lot further because we're already near this upper Bollinger Band. So it's forming like this huge bull flag pattern. So it's very possible that the stock could go below this mid Bollinger Band line, which that's exactly where I'd want to catch it. So I'd want it to come down to this 120 area. Okay, 120 is kind of a safe play for me, about a 10% downturn from here, I'd grab it at the 110 or 120 area, the LEAPS option, and then I'd ride it back up to 130, 133. Okay, so I'd get out for, again, 20, 30% ROI there on the LEAPS. So yeah, eyeing this 120 area on the downside. I would go out to Jan 15, 2027, and I'd pick up the 70 delta, which is going to be the 125 strike, pay $4,300 to control 100 shares, which would have costed me about $13,000. So very capital efficient and enough time to be right on Robinhood, as I think Robinhood is going much higher in the future, potentially early next year in the 150s or 160s. Okay, so that's Robinhood. The next one, the next and last stock is going to be Palantir. We already played the LEAPS on this down here. Okay, we got out pretty quick on these. Now we might be getting another setup to play it again if the market does come down. But if the market goes up, Palantir is definitely going to be ripping from here. It's probably going to go into the mid 180s, maybe even to 190. So at that point, what cash secured put would I play? So let's take a look at the position. Right now, I have about 900 shares, and then I have about 2 cash secured puts at the 170 level. So if it goes up tomorrow, 185, somewhere around there, I'd go out to Jan 19th, or Jan 9th rather, 31 days, okay? And I would go pretty aggressive. I would go either 30 delta, 35 delta. Again, to be safe, I would go 25 delta. That'd be around the 165 strike. But for me, I'm probably going to go back to those 175s and pick up about 3.9% ROI there. Okay, $640. Good to go. 175. I already got assigned at 177.5, so I don't mind owning shares at that point. Okay, so that's kind of the play I'm going to go with on Palantir. Now on the downside, we need to have this thing get all the way down here to 164. Now, it's very unlikely that it's going to go down there, but who knows? There's always a surprise, right? Surprises happen. And if we do get that opportunity to buy there before it goes back up again, that would be a prime opportunity, 164, okay? I would grab the LEAP, 70 delta, and I'd wait for this thing to go back up to that 50-day moving average, which again would be about a 9% pop from there. And I'd get out at about 20 to 30% ROI on the LEAPS, okay? So the LEAPS, I'll be playing there most likely, again, Jan 15, 2027, 70 deltas, which would be the 165 strike. I'd pay $5,500 to control 100 shares versus paying $18,000 if I were to buy the shares today. So I really like Palantir here. Cash secured puts are going to be safest, but again, for a LEAPS opportunity, I'm really liking this area. We'll see if we get it. I think tomorrow we head upwards, but again, it's always nice to be prepared for these LEAPS situations if the market does end up going down. I hope you enjoyed this video, and I'll see you tomorrow in tomorrow's market update. Take care.